The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is Wednesday, the 17th of June. And let's just straight to the numbers. Thanks everyone for those great Tiger hosts that gave you all that information prior to this. I hope I can continue that. The S&P E-minis, this is the September contract. It's up 250 at 2,091.75. Now, what's really important about this, it's got this trend line, this Chapman wave falling axe formation. Let me just show you something very interesting here. This is a pattern that I discussed in my CD introducing the Chapman wave methodology. It has the lower highs and sharply lower lows, and that basically says, hey, be careful, because at any point we could see a powerful move to the upside above the resistance, and then you could get a one-to-one to the upside. At the same time, it's saying this trend line has been such tremendous resistance. Let me just make it nice and thick so that you can see what I'm talking about. Right there. Look at that, thick. That's a resistance. Talk about a line in the sand. That's the line in the sand. Closed at any point in the next 3 days above, going into Monday, I should say, into Monday afternoon, going into the 2106s. Actually, I would like to see it over the 2007 level. And that would say, watch out, we could be going all the way back to the top of 2126. But at the same time, at that point, you would start to see this become a support level. Very important. If we can't even get there, it's suggesting that we have weakness, and the stochastic and the MACD are right on the cusp, and I'll explain why. This will be a little technical exercise. You see the way at 2072.50, the low that was made in the E-mini. I wonder if I should use the S&P, because most of you, let me use the SPY. I wonder if I've even updated the SPY. I just want to use something that you look at consistently. Okay, so the S&P made a peak F right there on the, I believe that was the 19th. Let me just double check. That was the 19th. So the SPY made a high 213 points. Is that 78? Yes. 213.78. Here we go. All right, you got to click on the right thing. There you are. 213.78, and that was what? That was on 6. Was it 5? 519. All right, got it. And it made lower lows. It went to a trough A, then a trough B, and that's it. And then it had a big spike to an A, which became an A minus because it pulled back so sharply. Now you've got a brand new A. Basically, what we're looking at here, I'm just going to repeat the same process right there. The little exercise that we're doing here. And that's saying on the outer perimeters of the wick, that is the whole candle with the wick. It isn't just the body of the candle. What we're looking at is a situation where you've got lower highs, lower lows, and if there is a punch, and it really has to be a punch, I won't make it quite so thick, but a punch through the resistance at 211.70, and right now we're at 210.63. Let me just double check. That was wrong. It wasn't 211.70. It is. Can you just do that? Let me just check to see. Oh, I'm being covered. I'm not able to. 210. Yeah, it's 211.70. If there's a push above 211.70, the resistance, the next resistance is 212.11. The next resistance on the left is 212.67, and that's how we'll go. And it starts to change the pattern, and instead of this strong down-trending cone formation, you suddenly get a cup formation, which would suggest that you're going to try to test the recent highs of May. So one step at a time, and it says that 210.30 on the SPY is very strong, is not very strong. It is some support. The real strong support should be at 209.80s. If a break on a close below 209.80, and all of a sudden you've got that fading pattern. Now let's go back to the MACD and the stochastic. You see that this low here made, there's that green fast moving average of the MACD. That was the low. This low here was slightly higher, and it coincided with the MACD's fast moving average holding very well. But the stochastic was way higher. So that, in a sense, is a positive divergence. The implication is that if there is a break to the upside into the 212s, you've got to consider that there's a potential for a rally to the upside. I'm suspecting that that's not going to work, that it's going to fail. That's what I'm suspecting. And we're trying to trade that particular scenario. We haven't got too much in the way of positions in that case, but we are trying to go for that. Now, let's continue. The weekly chart has made a peak E. I should put it down. I think I have a down arrow here. I should. It's covered. I should have a down arrow for two reasons. One is there were two weekly closes under the 9-period moving average, and the MACD and stochastic were fading poorly. And that suggests that if there is another rally, it's going to be a right arm extension or rogue wave if it goes over 213.78. I have to call it F/maybe A. Let me move this away, the 120-minute chart, and you'll see that the monthly chart is still acting pretty darn well. So we've got to go one step at a time. Now let's continue. We're going to look at, let's do the numbers. The Dow. The Dow is up 36 at 17,940. Let me just draw this in a little thicker. Right here. Take it right there. And right there. Actually, I'm going to be a little conservative. I'm going to say there's two lines, but the first line is if the Dow is able to close above 18,020. Make it as simple as that. A close above 18,020 suggests that we've got to be watching out for that high that was made on the 11th of June at 18,109. All right, and the support has to hold at 17,850s, because if it starts to break and close under that, it's suggesting it's making another H lowercase h pattern. S&P, we'll go right to the S&P. The S&P at this particular point is at 2,100, and it's up 3.7. And it's the same thing. You've got very strong resistance at the trend line at about 2107. Let's call it 2107.50. And the support that has to hold is in the 2092 area. Close below 2092 says, oh, be careful, another failure pattern. And let's go to the IWM, which was strong the other day. IWM acting well. It's is it a new recovery high? 127.13 was the previous high. 126.96. We're almost there. That would make a leg E up in the 120-minute chart, in the monthly chart, if there was a break to the upside above that 127.13 high peak F in the weekly chart. So far, that's very nice price movement, but the technicals are not really confirming. And it's leg F to the upside in the daily. I could call it an alternate wave count F/C. That would be A. That would be C. For now, I'm just going to go with F. And we'll have to wait for the end of the day and into tomorrow to make some decision about it. Why am I calling it an F? Because the MACD has not turned down. It is holding very nicely. The fast-moving average hasn't broken below the red line. So this is all one big move to the upside, and very often they can take you to a G. And then you have to be very careful. Let's go to the IWM. QQQ series, at this particular point, I'm calling the QQ series kind of stuck. It's stuck in a trading range, and the trading range at 109.05 right now is really between 109.50, maybe 109.70s maximum, and the downside, a close below 108.40 suggests that it could be pulling back. So I believe we should be having a break at any moment. A break, or do we have a break, or do we have a caller? We have Garo on the line in Newport Beach. Garo, how are you?
How are you, sir? I'm very good.
I'm well, thank you.
All right. I'm calling regarding AMBA, AMBA.
Yes.
Yeah, I'm day trading this for now about two months now. And I'm making very good money out of it. I want to know, where is your resistance on that? Where do you think it's going to stop and where it's going to curve?
Well, it's gone a little higher than I anticipated. The reason being, I thought that the peak E with the two dojis that were made in amber, which is Amberella ink, at 119.94 up to right now, I thought that that high of the 10th at 115.16 was going to be resistance, and it was for just a brief moment. Then it broke out. I'm looking at this, and I'm suggesting that it is as a long position for the last many weeks. It's just been perfect. I think it's just getting to the point now where you've got to be a little bit more, a little quicker on the trigger finger if you're holding it. But if you're doing the day trading, I'm going to say AB. I think there's one more little pop to the upside above 120.77 in the 120-minute chart. The high today was 120.52. I think it's going to go a little bit higher. And then I think what will happen is I had drawn a rectangle formation. I was sort of correct on the upside, but I was wrong on the downside. It never made that downside at all. So I'm going to put this in now, a new trading range. And the trading range I'm going to suggest is that on the upside, 120, it could get, it's a 119.60. The high was 120.52. I want to look at this. On a very short-term basis, I would do this. Do you have any position at this particular point?
No, yes, today, yes, I had. I bought it at 118. 118. I have 600 shares, but it's right on R1 now. The R1 is 119.63, and considering that there's going to be news regarding the rates, so I may get out very soon before the news comes out. The days that the news comes out regarding the rates, interest rates, I don't trade that day at all.
So, Carol, what I'm going to do is I'm going to make a suggestion here. And the suggestion is that if you're day trading, stick to your plan, allow the whole, whatever it is at this afternoon, let it unfold, let it just do whatever it has to do. I like this, but I do think that we're just in a position, I'm not even sure I'd want to short it, but I think it's getting a little bit toppy right here. I don't see more than about 2 points, maybe 2.5 points to the upside, but I do see that it could come back to the 116, 113 area if the general market starts to turn down this afternoon. I don't want to stop you from doing the day trading. If the market takes the news today in a stride, then maybe you'll have one more turn tomorrow to play the upside, and then I would just say step aside for 2 days, give it into early next week, and we'll look at it again. But at this point, you've done fabulously. I just think the upside is becoming a little bit limited.
Very good, very good. I appreciate it. Thank you,
congratulations for
God
trading
bless.
it that way. It's a fabulous looking stock. Folks, just got a break coming up, and Gara's in great on this upside. I think there's more to come, but it might need a little bit of a breather. I'll be right back. We'll be back with Ernie straight after this break, and I'll tell you right now that the Dow is up 37. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back, and we are going to go straight over to Ernie in Dearborn, Michigan. Dear Ernie, how are you?
I'm fine, thank you. The last time we chatted, we talked about my little Sarepta stock here. And
yes,
we had a little strategy. Since then, it stayed above the 9-day moving average, which has kind of kept me in. But my point and figure chart says maybe 28 to 31 might be some kind of a high. What's your thought? I'm not a partial type seller. I'm in or I'm out.
Okay. So what I'm going to suggest is this. You've been in this for some time. You've really managed that whole trade, that rectangle trading band that we were talking about before. Right. And the question was, how does it hold? This is Sarepta Therapeutics. This is an amazing company because it can go from plunging to skyrocketing, and that's just based on this biotech news. And at this point, it's at $29.62. It's up $1.32. Now, what's really important is, as you said, it's held the 9-period. It's really walked the 9-period exponential moving average. That's my expression. That black line, which is at 27.82, and the MACD is pulled back, but the price is held. Stochastic is still at 82%. Above 80% is good, but it is starting to decline. The on-balance volume is matching the price move and confirming the rally to this point. However, I've got an alternate count, and I've called this count a leg D. Nothing else, just a leg D. That's the daily. But I know that you are in a situation where you like to look at stocks. You're not unafraid to get in. You're not unafraid to get out. But the big question is, Are you going to use the weekly chart as your benchmark, or you want to trade off the daily chart? Because the daily chart is suggesting it's almost like the stock we looked at just a moment ago when we were looking at, of course, I've already forgotten the name, Ambarella. It's just at a kind of a price point that says I could go higher, but I'll be going higher without the technicals at this point in the daily. But the weekly chart is so strong, and the monthly chart is improving. 120-minute chart is making a leg. I'm calling it an F for now until there's evidence that it's not. So if I say to you to be a little bit cautious, you're either in or you're out. So would it suit you if I said you could take 29.59 right now, or you could use the 27.80 9-period moving average as a stop, maybe 27.70 as a stop, but use a 1-point trading stop, so that if it went to $30 without getting to the 27s at all, you would have made another point. In other words,
well, it hit a high of 30.30 today.
Right now, my biggest issue here is, I know it's a biotech stock, but it has a momentum that when it builds, it seems to stay in that position until it spikes to a high, and that high makes an intraday spike up, and then it collapses, and that's usually the clue to get out. It hasn't done that yet. Right. So do you lose 2 points by putting in a stop under the 27.79 area? Or do you try to say, hey, Therapeutics, you've done fantastically so far. I'm going to put my stop. You see, that's the reason why I'd like to split it up. I'd like to say I'd have a stop under 27 at 27.60 maybe for the whole thing. But I would not have that stop for the trading position, which would, I'd have that 1-point trading stop. And that way, the move to the upside could ameliorate the 2 points to the downside, 1.5 points to the downside. That's kind of the way I'm thinking of it. But if you're in or you're out, I would say please think about the weekly chart. And then if you are out, the best thing is just to say if it gets to 26.30 to 25.70, I want to reconsider that I might want to put at least some part of it back again.
I see.
So I'm giving you two scenarios. One is you're out right now at 29.50. Why wait for 2 points when you've only got maybe a point or so on the upside?
Correct.
And the other, that's if you're either in or out. The other is to say, use a trading stop on half of 1 point and make a stop at 27.70, just under the 9 EMA on the rest. And there's a third scenario that says, if you're out, regardless of which way you're out, don't take your eye off the prize, because this stock so far, the weekly chart is still very active. And I do like it. And that's the only reason why, in some way, I would like to say to you, why not keep just a little bit in case it doesn't do anything, but it keeps going up. And this is different to other stocks. I don't want to say to you, just get out and forget about it. You've done well. I like the weekly chart, and until it shows signs that it's going to decline, I don't want to get in the way of it. So does that help you a little bit?
Yes, sure does. Hey, thank you very much. Have a nice day.
And you too. Thank you for calling. Congratulations on a fabulous position plan. I'll be right back, folks. Dow is up. Whoa, it's just pulled back. It's up 10. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone, we're back. So I haven't really talked much about the market itself. We've gone to our different callers, and they've had fabulous stocks. And one of the reasons why I'm thinking that the upside is limited, regardless of what happens or regardless of Greece, etc., is even if you look at the stocks that we just discussed, Ambarella and Sarepta Therapeutics, what we're really looking at is are stocks that these are the isolated cases of leadership. These, in fact, both of them, both Ernie and Garo, have chosen the best of the best at this particular point. But there are a lot of stocks that are just stalling. And there are a lot of stocks that I looked at. You remember just over the last week, we've been looking at the Investor Business Daily top 15, top 10, top 15. And they're stalling. They're having a real problem. So what I'm looking at here is I'm looking at the volatility index. And and what I said to my subscribers on my opening call this morning, and we are actually, there is a long position that we wanted because I wanted leg D. It actually made D without us, so I hope it doesn't pull back. I don't really want it right now. I want to think about it. That's number one. Number two is we're looking to adding positions to the short side, but I've been very strict about it. And we'll see if we're going to get the chance to at least look at the, at least to be able to get these positions no matter what happens this afternoon. So let me go back to the story that my cover story. My cover story is that unless you have a theme that's that the market interprets as negative, it allows the market to constantly rise to a level. It's like a cork in water. And you need some really dark cloud cover to be pushing the market because of the news being interpreted as bad news. Well, we've got Greece and we've got the Fed right now. So the two of them together could do it. Maybe one of them could do it partially. And maybe if everything's resolved by Monday, we start to see a break to new highs. I don't think that's really the case. If I'm looking at the volatility index, the VIX index, let's get rid of the 120 because it's really, in this case, it's really not the rudder, it's the rudder for a trade, but the real rudder here is the daily. And the daily is saying that until at 1479, down 2 cents, not bad action, and having made a low today of 1441, what needs to happen if you are a bull on the VIX and a bear on the market is that you need to see the weekly chart, which is starting to make slightly higher highs, but definitely a higher low from the 1210 low that was made way back in, that was 5 weeks ago. So that was that in May? Yep, May that week, the 22nd. But we went all the way to 1574, the week of the 12th. We've pulled back, and now we're holding very nicely. And there is a curve in the bottom to make a bowl or a cup formation, the second one. The MACD is crossed positively, and the stochastic's at 38% rally. If there's going to be a negation of the internals improving, it would say that there's a slide on Friday at 4 o'clock under 1377. And once again, it's under the 9-period moving average. But if there's a move that only takes it to 1380 or higher, that's okay action. But very good action on the VIX, very good action with the counterpoint is very negative for the market, is that the 200-period moving average of 16.33, that goldy color one in this middle chart, daily, weekly, monthly, and this I got to get rid of. I don't know what this is doing here. Oops, whoa, that was a mistake. Cancel. I wanted that. Made an error. This is going to be very important. This is the monthly. Why? Because the monthly is even starting, I wouldn't call it improving, but it has the potential that if by Friday afternoon to Monday morning, if there is a spike into the high 16s, all of a sudden, you've got the little pieces of the puzzle coming together to say that the volatility index, because what will happen is that'll become, let's say, a leg B. Maybe it's an F/B, but it's a new leg up in the daily, and that is the rudder that is going to steer the weekly. And the weekly is the rudder that's going to steer the super tanker of the monthly that takes forever to make a turn. Look how if I was just looking at the technicals and that MACD was like that, even though the stochastic's at 20%, I would have said, gee, the VIX index must be at least in the 16s. It's not, it's in the 14s. So the stochastic is showing how important it is. So to get the stochastic in the monthly chart to even show a modicum of strength, you'd have to get it to 32%. 32% says you are going in that VIX index to the 16.80, 17.30 area. That's my thinking. So anything underneath the 14s, especially under the 1370s, says buying pressure is back. Watch out, because there are going to be rogue waves to the upside. Now let's look at the actual chart itself of the Dow. INDU, okay, right there. Let me just pull this across so that you can see it better right there. That's the daily. So the daily made a peak F top with, and the reason why we keep going short, we've been short, the Dow is that on the 19th, that high of 18,351 had a very next day of 18,350. It's what I call it a Chapman wave 2-bar reversal. And look what happened. The stochastic fell. There was a double top in the on-balance volume, the blue lines there. The MACD then turned around, and we plunged down from the 18,351 area to 17,712. It's not that much, 800 points or so. When you're taking so much time, it's almost a month now, and we haven't broken the 17,500. It's absolutely key, important support. But it's suggesting by the weekly chart, having made that peak E double top, see that double top there, what I call a drop bucket pattern, 18,288 back there on the in March, and then in May you went to 18,351, made a cup formation, and you've broken halfway, which always suggests that you could test the low of 17,579. And if you take that out decisively, you can have a 1-to-1 to the downside, which takes you to my target of July, late July, early August of 17,262. We'll see. What can I say? It's just a projection. And here's that pink inside wedge support line. We'll see what happens. In fact, that could now be moved to right here. Right. Okay, get rid of the C. Take that. There you are. Okay, so what we've got is nice. This is I'm much happier with this. And that says that this is the most important support area coming up next week, this week and next week. Holding 17,560, I'm looking at 17,500s completely. A trade into the 17,400s just sets up something completely different because why? It impacts the monthly chart, which is holding beautifully on the 9-period moving average. MACD is turned down, stochastics at 84%, still good, but the price is the arbiter of the trend. And right now it's saying, I am not at this particular point showing signs of deterioration in the price. A close below 17,660 on the 9-period moving average says, hey, first time I'm closing below it decisively since I broke out way back, in June of 2012. Now let me just see, 2012 to 2013, I'd say that that's 1 year. 2013 to 2014, wow. I'm, of course, here with the grandkids, so I'm into the numbers here. 2 years. And then a third year, we're into June of 2015. Now, isn't that interesting? 3 years, and the last time that the stochastic was, that the price was under, the Dow was under the 9-period moving average in the monthly chart was, for a moment, the close of the May of 2012, low of 12,311, and then the next month was a low of 12,035. I remember that well. In fact, I remember it well because I was listening to someone being interviewed and talking about had cans of food in the cave, and just the negativity was just unbelievable. I almost drove off the road. I was so depressed. And the 12,000 level held. I remember going to Rockport that Sunday, and a good friend who just occasionally used to work for GE, occasionally I'll mention the stock market, but just in passing, said, what do you think of the market? And I said, if it doesn't hold 12,000, be careful. If it holds 12,000, that's a good sign. And what happened when you 12,035 and turned around? Wow, if I'd driven off the road, I would have missed that. So you got to be careful. This is also a period, but just like our callers this morning, I'm going to suggest do your homework. For instance, I had a stock, I'm going to mention it now because I'm not going to get it, and I hope I don't get it. W. W is Wayfair Inc. What I wanted for subscribers, oops, maybe we got it, I don't know. No, we didn't. What I wanted for subscribers was to get, I don't know, I shouldn't say, I don't know if we got it, is to get the leg D. I wanted to pull back, and I didn't say a time. I meant to say before a certain time, and then I want a push to the upside, and if it takes out the left side high, I was going to raise the stop. In the meantime, back at the ranch, I was a little sluggish in my entire call, and I don't know if we've got it. If we've got it, it's still a really good-looking stock, except it has made the leg D. So I have to be a little bit careful here. What I was really thinking of is that if we got it on a pullback from the close yesterday, then the chances were very strong. What was the close yesterday? The close yesterday on W, the symbol, was 32.28. 34.28. So just off the top of my head, I really can't remember what I'd said, because it's been a very busy morning. And looking at it, I had done this work on the 120-minute chart, and it suggested that there could be a pop-up to give you that cup formation, the one I call the drop bucket. And my thinking was that if we got it early enough, and then it did rally, and it went above that level, it means that if the 120-minute chart creates a certain formation, There could be another spike to the upside because why? It's one of the active stocks, one of the stocks that are looking good on a short-term basis. And it appears the rectangle top that was formed when it had that big spike to 34.69 on the 11th of May. So, yeah, I am looking at certain stocks on the long side, but at the same time, they're really more trading positions. I'm prepared to get out because I don't want to be in a situation where if the market goes down, I'm trying to handle the long side because the long side could turn out to be the wrong side if, in fact, we're looking at the whole panoply of negativity of bonds and Greece coming in together over the next 4 sessions. So now let's go to the TLT. TLT, when I last looked, was down. Well, we're down $1.36 at 117.71. Let me go to my long-term charts here. So that says the TLT had a nice candle last week. It's still a nice candle, but it hasn't decisively gone above it, and that's important with this. For my work, this kind of candle says you've got to close above 119.07 quite decisively. For the entire bar, you've got to have a really strong bar. And that turns this into a potential reversal candle for at least a move to the next level of resistance, which is either a moving average resistance, in this case 121.25 on the 9 period, or the peak that was made, the last peak, and the last peak was at a 122.57. And what I'd said yesterday was that might be a little difficult to do. And certainly might be a little difficult to do. Now, when I looked at last night, when I looked at the TBT, I thought, okay, something's going on here. Because it's the TBT, which has made a leg D in the weekly chart, that's the ultra short Lehman 20-year Treasury fund. It's the ETF, I believe, an inverted TLT on the long side, so the short side. And look at this. What it's saying is that I can't really count this any other way. I could count the TLT, but this really said it's a leg B, and it would be a leg B peak B failure if it took out the at 49.92 right now for $1.08. If it even came into the low 48s, high 47s, I'd have to say, you know what, rogue wave peak B minus. I don't know how to explain it. Yes, I could make, and I've given you that line right here for those aficionados of the Chapman wave methodology. The TBT would be a great example, if it failed from here, of a Chapman wave unconventional instant restart. I really didn't want to get into the nitty-gritties of this at this particular time, but if anything happens here, I'll inform you about the technique itself, other than to say from a low bar with a 3-bar reversal, you could take the low of 46.15 on the 8th, of the 8th of May, and the low that was made a little bit below 45.81 on the 29th can be excused because it's a Chapman wave unconventional flat-based restart. Whoa, that explains the whole thing. But listening to it, the eyes glaze over. I can understand that. And what it says is once it's formed, you can have an A to a B to a C to a D, and you can even go to an E. But when it turns around, it is coming right back to test the 46. The first low is 46.15. And the second low is 45.81. So that's the area that it will come back to and probably pierce it. What is that saying? That is saying that my long-term theory about the Japanization of bond yields is still intact. And by that being intact, it means that until the Fed really changes its policy, we might be anticipating that somehow or other there is a higher move in bonds and lower yield. I'll talk about that when we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, we're back. So we're looking at shop. I had a question about it in the den, although I can't see the den. Sorry, guys, in the den. But I just do not want to mess my setup. It's working beautifully right now. To do anything else would be silly. Sharp is IPO trading at 40.01, came out around about the 25th of last month, and it's had a spectacular move from the 24s to about 42 is the high today. What is the high today? 42.13. Peak E in the 120-minute chart, leg B in the daily chart, leg A in the weekly, and leg A, of course, in the monthly. So let me just do a quick thing. I remember hearing a little bit about this Sharp Fly Inc. Is that correct? I think I'm seeing it correctly. And what I would suggest is this. If you are trading it, you got to pull a Garo here. You've got to pull it where you have techniques that say intraday I can go long, I can go long, I can go long, I can go long. trend has changed. I can go short and go short. At this particular time, it's acting very well. It's acting a little bit market independent, but I would suggest two things. One is that on a very short-term basis, I think the upside is limited to about maybe one more pop if it can do that. And if it pops one more time, I think it doesn't go much higher than 42.60, maybe 43.10-ish. And then it should turn around. That's if it can do it. But if it breaks at 40.04 right now, if it breaks under the candle low of today, underneath 38, closes under 38, then the rectangle formation says, be careful, because it could have a little bit of a pullback, not a little bit, a lot in points, but a little compared to where it's been, down to the mid-37s. It could even hit 36. And then if it stabilizes, I'd look at it again. I would not look at it as a short. I'd look at it as any time the market is acting positively. This is a great trading stock. It's an IPO. You've got no history. I'm just saying the pattern is that there are buyers at this particular point. It has not made a lower low than that initial low. It's had days and days to do that. It hasn't done. It's made higher lows and higher highs. That's a good sign. I suspect it's going to fulfill its daily A, peak A, peak B. Then it'll pop up to a C and a D, and then you've got to be real careful because that's its first big timeout. Let me run through things again as we're about to wrap up here. You've got Daryl coming up. Should be a wonderful show as always with Daryl. I love the way he has those trading ranges. He looks at those different parameters in the those overbought levels and oversold. What am I doing? VIX.X. Just quickly, once again, the VIX at this particular point is acting a little bit better. It's up a penny, but you're just at a stalling formation. This afternoon at 250 to 320. If the Dow is just holding steady, it's waiting for Greece. If perchance it's had a big move of 100 points up or 100 points down, Greece becomes the lighter fluid. If, in fact, by Friday or Monday, there's just negative action in Greece. That's fuel. It's the grease to the fire. So everything else says, if it's just kind of neutral to up, the Fed is, whatever they say, if the market responds positively, the higher we can go, the better it is for when Greece comes out and defaults or whatever they do, if we're going to come down from there. But if we are down, and then Greece does it, this market is vulnerable. And I'm going to say it again, that 17,500 support in the Dow over the next couple of weeks, absolutely imperative to maintain and hold. If it starts to break, that's very negative. 18,000 at this point, 18,050s to 18,090s, for me, is in fact a very strong resistance that I'd be looking at. So the trading, my bias is to be looking at the short side. The long side, what we're trying for are trades. At this point, I want to keep it that way. So hold on tight. You've got Daryl coming on. Have a great day. Have a wonderful day. And good trading to you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.